Welcome to Shareholders of a Better World, brought to you by TBLI Group. At TBLI Group, we have an established reputation as an organization dedicated to building the ecosystem of global sustainability and impact investing. We're doing this through educating, advising, and facilitating transactions in global sustainability and impact business, as well as capital solutions for private companies, family offices, and fund groups. For nearly 25 years, TBLI Group has created a vertically integrated ecosystem of education to action through TBLI conferences and TBLI consulting. More about our company can be found at tbligroup.com. This webinar is brought to you by TBLI Foundation, which hosts educational learning experiences dedicated to a better planet. Through the foundation, we build sustainable communities by sharing the people and the experiences making a difference to so many of our lives around the world. Our weekly podcasts bring impact thought leaders that are doing and not only chatting. Now let me introduce my guest today. Welcome to our webinar today. Thank you so much for joining us. For those of you who never joined before, if you need to type in a question, just type it in the lower right-hand corner. If you need to send a private chat, just move your mouse over the name of the person and a window will pop up. Emojis below are to clap if you find something brilliant or funny. We're very honored today. We have the chairwoman of Brunel Pension Funds, Denise Le Gal, £38 billion pension fund, and she's going to be sharing with us their approach to sustainable investment and the difference between impact investing and impactful investment. Good afternoon, Denise. Thanks for taking the time.
Good afternoon, Robert. Firstly, can I check that you can hear me?
I can hear you perfectly.
Thank you very much. Thank you for inviting me. It's a real pleasure and honor to be with you today. About Brunel Pension Partnership is one of the 8 UK local government pension scheme pools, bringing together some 38 billion of investments of 10 like-minded funds across the southwest of England. These shareholders, who are also our clients, are 9 local authorities and the Environment Agency. So these organizations are at the coalface of dealing with consequences, whether that be flooding, environmental degradation, fly tipping, waste collection, and social care, to name but a few. That our approach to investment considers these impacts and externalities is entirely unsurprising, but incredibly important. How we view the world is that responsible investment is central to how Brunel fulfills its fiduciary duties. As responsible investors, we recognize that every company or asset we invest in operates interdependently with the economy, civil society, and the physical environment. Our strapline is forging better futures by investing for a world worth living in. So the question for today is, how can pension funds integrate impact investing? We don't have an impact fund per se. We try to make impactful investments across the board. Also, one might argue that everything we invest in has some form of impact or another, good or bad. Needless to say, we seek the good. What's really important to our clients is good impact reporting. There are several reasons why we don't have an impact fund per se. Impact label funds, specifically in private equity, are a lot smaller. You will have less proven managers, less track record, less proven projects, less scale, etc., which may add up to increased risk. And unfortunately, there's no price discount for inexperience. So if investors want to change their risk return characteristics, they will need to look at impact through a different lens and ask themselves, is this project or investment impactful? What need is being addressed? What is it bringing to the global table to improve life on the planet as we know it today? Why we say that is because impact hasn't really been defined yet. We haven't bottomed out what impact really means. Is it a substitution for something that already exists? Is it something new? How do we measure it? Too often, a lack of data is used as an excuse to avoid certain investments, as we cannot measure the impact. But metrics alone are not the answer. We look at qualitative case studies to better understand the impact of our investments. The message here is to stop investing for labels, but invest for outcomes. Some investments have no data, but can have great impact on communities. For example, MTN in South Africa. Its mobile technology allowed many communities in hard-to-reach places such as Rwanda, South Sudan, and within South Africa itself, access to technology to make payments, move money easily, and importantly, cheaply. Another example, you could have some type of infrastructure in emerging markets like roads or hospitals that in themselves may not seem terribly green, but have a massive impact in hard-to-reach areas in their communities. So impact investing is highly nuanced, and it's about changing mindsets across governments, companies, asset owners and managers, communities, and individuals. We all have to consider what we're doing and how it will land, and ultimately what impact our investments will have. Thomas Edison didn't rely on past data to create the light bulb. His most famous quote, "Our greatest weakness lies in giving up. The most certain way to succeed is always to try just one more time." Well, investing impactfully to improve the world is a bit like that. We may fail sometimes, but we must keep trying in the absence of reliable data or proven outcomes, and in identifying good disruptors. So all of what I've said so far is well and good, but then the question is, how do you effectively integrate responsible investing across your portfolios? Our approach on integrating ESG across portfolios and in everything we do at Brunel is threefold. It's built on three pillars. The first is to integrate sustainability criteria, into our operations and investment activities. The second is to collaborate with others across the industry and to support effective policymaking with government and regulators. And we're very active on that front. And also, thirdly, to be transparent in all of our activities. Those three pillars underpin our operations, providing a bedrock for our team, our clients, and our managers. We work really closely with our asset managers to ensure they embed our RI principles across all our portfolios and in line with how we design the portfolios. Manager selection is a central part of our RI stewardship and climate policies. And all of these policies, by the way, are available on our website, Brunel Pension Partnership, as our responsible investment outcomes reports. We examine how managers embed ESG principles into their own investment processes. And we also look at their company culture, not least in the area of diversity and inclusion. And I thought it would be appropriate to say a word on disinvestment. Someone said, and I don't remember who said this, disinvestment does one thing. It trickles down the moral slope of ownership. If we sell, someone else will buy, and that may be someone who cares less about it than we do. So we must be aware of turning fossil fuel, for example, into ransom assets. And even if we divest completely from fossil fuel companies, the problem doesn't go away. If we look at coal, for example, many of investors have moved away from coal investment, such that it's primarily in private or sovereign hands. Yet in the past year, there's been more coal emissions than ever before. So the point here is that planetary risks are not diversifiable, nor are they disinvestable. All we do is lose influence. That said, we effectively taper our exposure to fossil fuel through tilt strategies or by using Paris-aligned benchmarks, for example. That tapering approach allows for a just transition as we move towards other sustainable energy sources, all the while taking into consideration the social impact of doing so, in particular the impact on social capital and social mobility. And to end this part, I would like to come back to the point I made earlier. To make meaningful impact investments that will produce outcomes that help us make the world a better place and help us in our race to net zero, we must all come together. Policymakers, businesses, communities, individuals, as a matter of urgency. Economies who have created the post-industrialization crisis that we are now facing have a responsibility to help those lesser offenders who may not have the financial wherewithal to address the problem in their own jurisdictions. It's a global collective responsibility to address climate inequalities, and we can no longer say it's simply too hard to do. I'll end by quoting Abraham Lincoln, who once said, "The best way to predict the future is to create it." So let's all do just that.
Thank you, Denise. Brunel's the pensioners are mainly civil servants of different communities in the UK.
That's correct. So we have, within our asset pool, we have 880,000. There are 15 or 16 million altogether in the UK of municipal workers.
Correct.
So these are people who are not earning gold-plated pensions. They're the dinner ladies. They're people who work in schools, social workers, and of course all the employees of the Environment Agency who are very concerned with planetary change. So they are mainly we call them local authority workers.
Do you find that these pensioners are more concerned about sustainability and responsible investment than corporate pension funds?
I would hate to generalize because I know some UK pension funds are very aware because we belong to an asset owners network under the Prince of Wales's Accounting for Sustainability network. And we're all chairs of pension funds who are like-minded, and several of those are some of the larger UK pension funds. But it's fair to say that certainly in the Environment Agency, they did a survey of their membership to ask them what mattered to them. And that cohort definitely has particularly climate change high on their agenda, and they want us to invest responsibly to tackle the climate crisis.
Do you think that using an illiquid strategy for addressing climate is more effective than focusing mainly on liquid assets to address climate change?
Well, we need to look at both because, for example, in the U.S., some 50% of funds are invested in passively in listed markets. So it is important to address that. And we have just worked very closely with Russell to create a few Paris-aligned benchmarks. Don't ask me to elaborate on the technicalities of those, but they are aligned. So effectively, that helps those passive investors, and they do so by tilt strategies that I referred to earlier, to participate in creating in reaching that net zero. But of course, in the private markets, which continues to be a growing market because companies don't want to become listed as quickly as they used to in the past. There's a huge amount of innovation going on in those markets. One small example is we've invested in some giant greenhouses that are using water from a water treatment plant. It was a water sewage treatment plant that was being dumped in the river, not being used. So we're taking that water and using it, hot water, to heat the greenhouses. And those greenhouses are going to be producing 10% of the tomatoes in the UK, which otherwise would be imported, and cucumbers and peppers. And so, it's reducing the carbon footprint. It's using existing resources that were being wasted. And we were able to do that in the private markets. So it is a growing thing, but there's a huge wall of money waiting to invest in such investments. So,
because I was surprised when we were chatting yesterday that you have a significant portion of your assets in illiquid assets. Usually, pension funds are always very careful about liquidity, and so it's always a smaller percent. But yours, I was quite impressed.
Well, managing cash flows, not all pension funds are cash flow positive. Our funds are in the main fully funded or more than fully funded, but their cash flow positions vary slightly. But if you don't, there has been some analysis that shows that it is possible to liquidate the greatest 90% of our portfolios within a month, the rest within. There will always be some tails that are very hard to divest, but actually, we've often thought, and we're an open DB fund, so we don't have defined benefits. Sorry, forgive me for using that. So we're not in that race to buyout or. So we're an open fund, so we can take a certain percentage of our funds as ongoing assets, and in real assets, it is a good reliable source of secure income.
But in the direct investment or in the illiquid assets, you're investing in fund managers, not in direct deals, or are you doing both?
We're doing co-investing.
Okay.
And funds. We haven't done any alone, but the greenhouse I cited was we were investing alongside a few other pension funds and with green capital.
And going forward, do you think your pension fund group and other pension funds will do more in the illiquid space or in the direct deal or in the
that is the steer that the pensions minister is trying to steer, not just the pools, but also private sector schemes to move more into illiquids, because there's a huge agenda to build back better. And to level up, to have greater equality across the UK, and the way they see that is for pension funds to invest more in UK infrastructure in particular, and private markets.
But because you have to pay out, not all of your pensioners are receiving money for their pension. They could be still working. With private equity, with some fund manager investing for 7 years, or 5 years, or a longer period of time. How do you manage that where you have to, your cash flows of paying out the pensioners, receiving their pension every month? If you're going to be doing more in private equity, how is that bridged?
Well, our private equity projects are I can't think of the right word now, but they're all lumpy. So we introduce them at different times. Drawdowns happen at different intervals. So you would hope then that your payouts and your cash flows are rolling, that they're not bunched up together. And of course, we do have fixed income, which is does help. And in terms of the more liquid assets, that if you do have a liquidity or a cash requirement, you can turn to those more liquid investments and not have to worry about liquidating the illiquids, if you like, because they're ongoing and it's a rolling program.
And in your case, you will probably work with a large number of external fund managers. You don't probably manage all of that money in-house yourself. It's external. And I guess when you've been doing this for a while. When you started with some of these fund managers, they were not always exactly excited about doing responsible investment. You're going to lose money, blah, blah, blah. So how did you, other than saying, okay, you won't get the mandate, what have you done to try to build that capacity among those fund managers?
Well, they tuned in pretty quickly. When the government only announced the pooling of these municipal funds in 2016. So
wow,
we've only been going for 4 years. The first portfolios we launched were in 2017.
So what was it before? Where were these?
There were 89 local authority pension funds across the United Kingdom and Wales and Northern Ireland. Not Northern Ireland, separate funds, sorry, I beg your pardon, just England and Wales. And so those 89 funds have been consolidated into 8 pension pools. So we have been transitioning the assets from those 89 into the 8 pools, and we're currently at 80% transitioned now. So it's taken us 4 years to transition those assets, and it's been quite challenging at times. Sorry, what was your question again in terms of how managers? Yes.
Yeah, I mean, did you put a gun to that? You're not getting the money unless you do this.
Yes, quite. We agreed our investment principles, our own, and I did touch upon this in what I was saying earlier. Our clients all agreed what principles we had in terms of transparency, being responsible owners, etc. And we set those out very clearly when we invited people to tender, and that was open to the whole fund management community. And they had to meet those criteria. That was one filter. And then we had a whole series of filters, but ESG had to be on their radar, and they didn't have to be necessarily perfectly integrated at that stage, because there's been but as long as we knew they were on the journey, then they were in the running. And then we would look at those who were, best aligned to our own investment beliefs. And also we took an approach that we wanted it to be partnership. We wanted to appoint them not just with a view to, well, if you don't work in 3 years' time, we'll replace you. We think, 5 years is a short time for us. We think in long term, we want fund managers for a decade, if longer, however long we can make it work. And so they've really bought into that, and all the credit to them. BlackRock signing up to the PRI, UN's Sustainable Investment Framework is really interesting. They had a lot of pressure from the likes of Brunel to do so. And so that whole community now, they're still at various levels, and some have not integrated ESG in their actual portfolios. Some still have, a group sitting somewhere that consider these matters. But we like to look at things like their annual reports. Do they talk about it in their annual reports? Do the board understand it? And is it integrated into their culture? And we do really look at that. And I'm pleased to say that, for the most part, they're delivering.
And have you ever had a situation where the fund manager was not doing what they agreed to do, and you say, "I'm sorry, we can't work with you. You keep telling me you're going to do this CSG," but
we had a situation. So what I didn't mention, which I should have, is that we sign with any fund manager that we appoint, we sign an investment accord. And that's also on our website if anyone's interested. And that's an agreement between the fund manager and Brunel on how we will behave and what we expect of one another. It's not a legally binding document, but it's an accord. And so if they're not behaving, and that includes responsible investment, and we did have one situation where we were not perfectly aligned, let's say. And so we had that accord stipulates that if things are going wrong, we have a dialogue, and we clearly set out what's not working, why, how can we address it, and what are the milestones with which we want them to be addressed. So this particular manager was not quite where we wanted them to be on ESG. And so they listened to us, and then they appointed a head of responsible investment to take them further along that journey. And I'm being cautious here in what I say because this is a real investment manager, but I'm pleased to say they have made huge strides. And so they're not on watch anymore, which is a good thing.
You seem to be very much focused on trying to make things work rather than confrontation. Let's try to get you on board, give the time, let's try to make it work, and give, rather than the gun to their head, fix this or you're out type of thing. So because you were also mentioning about divesting is not changing the behavior of the company. We need to engage. So is that very much you, or is that Brunel?
Oh, no. It's all of us at Brunel feel the same way. And we do a lot of engagement with companies. We use Federated Hermes to help us with that because we don't have a huge amount of resource. But I also quite separately used to co-chair the Local Authority Pension Fund Forum, which is an engagement network of those 89 funds that I mentioned earlier. And I had the opportunity to visit chairmen of boards of companies that maybe had some safety issues with employees or excessive pay. And what I discovered in that is that taking too much of an activist approach and banging on the table does not engage trust with the chairman of a board. If you have to have a dialogue, and if you have a meaningful dialogue and you really listen to what actions they're taking, because generally speaking, they want to do good, because they know that unless they address some of these issues, that they may become stranded assets. And they don't want that for their companies. They're the chair of those companies. So it's very much a carrot rather than a stick approach that we take, because otherwise the walls come up and then you don't really know what's going on. And there's one very large company that I know had some safety concerns, and there was engagement and a reflection to them of how important this was for the future of their company and how they're perceived. And it just happened that this is a very famous person, that the chair of that company realized that he wasn't behaving in a way that was aligned with his own company and what they were trying to achieve in the world. And so he did very quickly put a huge amount of resource to improve the safety of their employees. And now they're a much safer and happier company.
So you believe in conversation, communication, not to, okay, we're done. I remember we once invited Walmart and the Norwegian sovereign fund because they had kicked Walmart out of the fund. So I thought this might be a good conversation of having the person responsible for the Norwegian sovereign fund with Walmart. Why did they kick them out? And it was the story was so ridiculous. It was like kids in a playground, yelling at each other. Yeah. So what happened, Walmart, the Sovereign Fund of Norway sent some questions, and they wrote it in such a way that Walmart felt that they were already guilty in the eyes of the Norwegian Pension Fund, and there was no point in dialogue. So they never responded, and that's why they kicked them out. So it was, there wasn't your approach of no matter what, we're going to try to make this work up to a point. It's very much farming, not hunting. I would think that it seems to be working for you, but do other pension funds, are they as patient as you are with the fund managers?
I think there is some different positioning. Some people are more activist than others. At the moment, we're very much engaging, and we want to give people time because it takes time. We will not move away from fossil fuels overnight. And there's so much demand for energy. We need to, and if we suddenly all stopped, well, we would not be able to function. We wouldn't have enough. We'd have blackouts. We'd have, so it's very. I'm glad you used that example because I know that and I think it might have actually been that fund that said they were disinvesting from Canadian sovereigns. They were largely because of the tar sands.
Yeah.
Now, in my view, and I have to say I'm biased because I was born in Canada, I grew up there, but I thought that was a little bit short-sighted because in wanting to move to other sources of energy, battery production is very important, and that requires a lot on lithium, nickel, copper. And where do you find those? Where do you find that? In Canada, Australia. There's lots of, and then the next question becomes, how do you do that mining in a better way so that we can produce other things to improve? And it applies across all companies. Cement producers. We still need cement to put up the wind farms. To hold those things in position. So, it has to be very thoughtfully worked out and along the chain of what happens as well. And so, I don't think anything's as black and white as sometimes it appears to be in the media, certainly, or even in reality.
There's been a new organization, the Net Zero Asset Managers, who've been created, I think, from December or November last year, and many have signed up. There's been some criticism of people claiming we have to go net zero, but they're still investing in carbon-intensive industries. Do you have a position on the concept of is net zero achievable for asset managers? And
well, I certainly hope it is, because otherwise we're in deep trouble. And we won't be able to have this conversation in 2050. Well, we may not be around in 2050, who knows? But it has to be achievable. We really should be achieving 50% of that by 2030. And we can. If we look at the pandemic, who would have thought that we'd have been able to address the issue so quickly by developing all those vaccines in so many jurisdictions? Because there was a global collective will to do so and a sense of urgency. Unfortunately, we don't have that with climate at the moment.
No.
But we're beginning. If we look at the climate events of this year, in my own In my own town, Winnipeg, which is where I grew up, coldest city in the world of a population of 500,000 or more. And last winter, they had 6 days of minus 20 below weather, as opposed to more like 26 days in a normal year. Vancouver, British Columbia, 49.6 degrees reached summer. Now, that's not just incredible, it's alarming. And we've seen the bushfires, the floods, the droughts. It's endless. So if there are any climate deniers out there today, I don't know what they're thinking, because they must be short-sighted. So we can do it, but we need to want to do it. And one of the big points in terms of what I was saying at the beginning is that we have the resource. So we take food, for example. We have enough food to feed everyone on the planet, all 7+ billion of us, but it's not distributed well. Similarly with the vaccine in the UK, many people are vaccinated, but there are many countries where, so it's still, the problem persists because the distribution of those vaccines hasn't happened. So similarly in tackling climate change, sure, in the UK we might have a lot of renewable energy, but other countries don't. So we have to help them, just as we will be helping them with vaccines by giving them vaccines. We need to help them in their decarbonizing journey. Otherwise, we'll never get there. But I'm hoping that COP26 is a good opportunity to not just be a talking shop, but to get some meaningful contributions from those who created the problem to those who ultimately will suffer the most from it if we don't address it.
Mm-hmm. I remember when we started 25 years ago trying to educate or convince asset owners and managers about sustainable investment. So it was early. There was no PRI or CDP or EVPA or EuroSIP. There was nothing out there. So everybody kept asking me, Robert, this is really interesting. Do you have research that showed there's no underperformance at worst or an outperformance at best? And I used to send them the research because there was research, and there was more and more research. And then I finally had an aha moment and realized that it was not about proof. It was about belief, because I looked at how much research was done on subprime collateralized debt obligation as a risk. I couldn't find very many, and I'm sure somewhere, maybe in Canada, a university did a paper, but who read it? Nobody. How much money went into it? Everything. And that's when I stopped, that. And how do you think, you seem to be quite passionate about this. How do you get someone from proof to belief?
Well, with data, you can prove just about anything. And there are 2.97 million and increasing benchmarks and indices out there. So you can use anything to tell the story you want to tell. Mm-hmm. But can you prove it? Can you prove it? And last week I was asked to join a panel on discussing whether ESG creates alpha or not in mm-hmm. investment portfolios. And there has been some academic research to say, actually, not really, because it may be attributable to other factors like growth. We've seen a lot of growth in markets recently, or not just growth, but momentum, because people are piling money into what they think are ESG funds. Mm-hmm. So it is absolutely about mindset and belief, and to try to influence, because we don't have the power to do anything, but we can try to influence. And I think it is incredible, because the UK government hadn't issued any green bonds at all, whereas our counterparts in Europe had, Germany and France, etc. And a number of us got together and wrote to the Treasury and to the Prime Minister to say, come on, we've got COP27 coming next year. What about green bonds? And we'd already had conversations with the Treasury, and there wasn't any interest in it. But because we wrote together collectively, few months later, not even 2 months, I think it was 6 weeks later, the government announced it was going to issue green bonds. And they did so. Because I think in a small way, we exerted it. They may have done so eventually anyway, but we wanted it to happen, and we've helped encourage them to do so. So hopefully we can all continue to influence things.
Beata had a question. Beata Dunn, my general counsel. Denise, do you work with local schools, universities to educate and change curriculum to start influencing new generations? We are in the UK. I'd love to see how younger generations start influencing their parents, communities, and their own future investments.
Thank you very much for that question. And it's a very apt one because yes, we do. The answer is yes, we do in a limited way. And what we have found in doing so is that, well, I'll backtrack slightly. We have been finding that it's difficult for us to recruit diversity into our company because many young people of different backgrounds think finance is for a certain type of person and for a certain elite. And we want to change that. And we want them to feel that they have a chance. And we know from other work that our clients have done in reaching hard-to-reach communities because they have the responsibility for social care. We do know that a little bit of help and a little bit of encouragement can go such a long way in bringing people to positions that they never would have dreamed possible. So at Brunel, and I'm probably going to get my knuckles wrapped for saying this. The board is currently considering establishing a foundation for that purpose, to reach people, bright people from hard to reach places, to create what we want to create are sustainable leaders for the future world. And at the moment, we're not able to do that because we don't have the diversity that we want. And so we have an away day in a couple of weeks, and that's what we're going to be doing, how we're going to set about creating that. And we'll be open to working with universities, schools, philanthropic foundations if they want to, whoever. But we really do see a gap, and that's one thing that is exciting me about the future at Brunel.
This is, I think, a long question, so you can take parts of it if you like. Malu wanted to know what Brunel's the split in impact investing among listed private equity or direct investments. How do you invest in these asset classes, and which do you deem to be the most impactful?
Well, the easy answer to that is to say probably the least impactful would be passive, because we don't have the same ability to deal with those companies directly in a passive fund. And then, well, I would say, in answer to your previous question, by the way we select fund managers, they're all trying to create impact. And so I know that the lines between listed and private are becoming increasingly blurred because some listed funds listed fund managers are increasing the proportion that they invest in private markets, simply because they can capture more growth there as companies take longer and longer to list. Their growth is happening when they're still private, a lot of their growth. So I think the split, I couldn't give you a number on it. I think I would say that there probably is, this is my opinion, not Brunel's. My own view is that at the moment, because the disruptors are not necessarily in the listed companies, I would argue that that there's some great innovation going on in the private markets that people don't even know about. If we look at water treatment, for example, there's been some companies that have been doing wonderful things, and they're not listed. So I would say for the innovator, the big innovators and disruptors, that they're probably more weighted to the private markets at this stage.
Do you think that because of the issue of stranded assets, that non-listed company, or certainly earlier stage, they don't have the stranded assets that the large listed companies have, large infrastructure? Like you mentioned, cement. I mean, there's a UK company, believe it or not, that has cement that has no CO2 emissions at all. And it uses waste. It uses fly ash and slag, salt water. So you'd say, great, we can get rid of all the CO2. And it's 3 times stronger, and it doesn't burn. So it's great for tunnels and foundations of windmills in offshore. But you're Lafarge, and you're a cement company with 500 quarries around the world, and you go to the bank. We're going to shift to geopolymer cement. We're going to get rid of all of our quarries. I need you to write down $13 billion in loans that you give me, and I need another 5 for the new locations. So that's a big challenge because of this. No one wants to take that loss. So is it nearly impossible for some of the large listed companies who have these stranded assets to be able to shift to a different way, because the financials, the banks won't let them write it down?
It's a real tough one, that one, and I can't say I have the answer to it. I think they have to try. And I know, for instance, in some of the early engagement that I did with some of the main oil companies, they were very good at that time of saying that they wanted to, stop deep sea drilling and extract more cleanly. However, their medium term capital program still included extraction.
Mm-hmm. Yeah.
And so I think for those who, they will have stranded assets, part of their business, but if it's a question of them shifting their businesses so that they can absorb that over time. And it will take time. They may not all survive. I really don't know. But again, I think there is still some denial out there, and particularly as we've seen recently with the price of oil going up so quickly in this little mini crisis we're having, that might be giving false hope that there's a return to the old days of wanting to dig again, to extract again. Mm. But I certainly hope that's not the case, and that they will focus their attention on new technologies. And you look at what the car industry is doing. They're really shifting their programs to electrification, and they're doing so quite rapidly. Now, who is the disruptor? Tesla. Mm. But who's going to ultimately produce more cars? I'm not sure.
Mm. Beata wanted to know, okay, magic wand, if you were UK FCA or PRA appointed head tomorrow, what would be on the top of your agenda?
Wow. FCA or PRA appointed. Wow. That is such a big question, and I'm not sure we have enough time, but because we need to look at our whole financial system through a different lens. It's not fit for purpose. It's backward looking. Everything we do is backward looking, and we need to look forward. We're not going to get anywhere if we keep looking at the past. And so just on the subject of auditors, just that alone, there's been lots of reviews, and yes, it hasn't really solved the problem. Are we getting appropriate disclosures? Have we got the transparency that we want? I don't think so. And so I would want to, and this is, you said this is a magic wand, right? So it's not reality. It's a wish.
It's okay.
Thing. Yeah, I would just rip up GAAP, and I would rip up all our accounting principles and rewrite them so that we can take into consideration intangibles. So much the balance sheets don't mean anything anymore. So, we need to relook at that so that we capture what a company is truly worth and not necessarily what it says it's worth. Wow. I'm sorry. I hope that was...
No, that was great. That was great. This is TBLI Talks are about open, honest conversation. Look at how many applause that you're getting. I think a lot of people agree with you. And it's always... People seem to be comfortable with the way things have always been done and not willing to kind of, rock the boat. And I think it's important that I agree with you. I think a lot of things are just, and certainly, just as simple what you mentioned, products, the intangibles, A bicycle in Europe, on average, is between 21 and 25% VAT throughout Europe. An airline ticket is no VAT.
Yeah,
Zero.
it's ridiculous. Yeah.
Zero. And I know it's an agreement after the World War II. They wanted the world to be connected. We have enough Ryanair flights now. And there's no tax on kerosene. So the intangibles are nowhere to be found at all. So how do you even start comparing as an investor if you're getting all of these intangibles or subsidy?
Well, Robert, as you got me on a rant, I'll go on another one, is that our political system does not help that.
No.
Because unfortunately, politicians are not rewarded for thinking long term. And they're almost de facto forced to think about the next election. And that there are exceptions to that, I hasten to add, but they don't tend to be in charge.
No.
And unfortunately, we've had too much in recent years, too much despotic, malignant narcissism in some of our world leaders.
Mm-hmm.
And that's dangerous because it does appeal to those who are feeling discomfiture about how the world is going, but they don't know how to address it. So they hear these lines coming from politicians of promises that can never be delivered, rather than hearing the reality of what we all have to do collectively to make the world a better place. But how do we change that without, moving to a different system of government?
We have to get Denise running for office.
Oh, gosh.
I don't know if your family would be happy about that. Aaron, I'm sorry. Go ahead. Aaron wanted to ask you, do we need to shift away on the emphasis to reach net zero overnight towards a focus more on an energy transition?
Yeah. Yes. I agree on that. And that's why I mentioned, we've got this net zero, but that's not a cliff by 2050. We have to, our own target at Brunel is to be half of that by 2030. So 7% year on year decrease is how we're looking at it. So we may have 1 year that's 12, one that's 9, one that's, as long as we get there. But the moving starts now, and the base date for measuring that is December 2019 for where we start to measure it. And we're doing that through various ways by the companies we invest in. But yes, it's not an overnight solution. It is a gradual process, and it has to be a just transition as well, so that people don't get left behind.
Penny Froggatt wanted to know, do you think ESG reporting is helpful in terms of moving capital and business in the right direction?
I think so. ESG reporting is not brilliant yet. I think we have a long way to go on that. And part of that is because people want metrics. And metrics are not, as I said earlier, not the answer alone in this. So there's lots of nuanced qualitative factors that so there needs to be narrative in ESG reporting for it to become meaningful for companies that are looking at that. And companies increasingly are aware that this is the pressure to change their behaviors is not going to go away. It's increasing. And if we look at younger generations, my own children, my goodness, if I dare buy something on Amazon, I have to sneak it in. I have to get the dog and bury it in the garden. So that and it's of course it's only by necessity. But that pressure is not going away, and thank goodness. I'm so happy that the younger generation really cares about that. And initially, I heard some people saying, "Well, yes, they're young. When you're young, you're always idealistic." Which is true. I think if I look back, I was quite idealistic. But this is not idealism. They're thinking about, well, I have a world to live in. They see all these climate emergencies and they think, why are you doing this? Why are you grown-ups being so irresponsible? Why are you not doing something about it? You made this mess, you and your grandparents. You've got to clean it up. And I think that they genuinely feel like that it's not a question of idealism. Again, I've forgotten what the question was. Sorry.
It was the question was: do you think it was about ESG reporting is helpful in terms of moving capital or business in the right direction?
Yeah. So yes, the answer is I think it is. Yeah, but it's not perfect yet. It needs a lot of work.
Do you think it's still hard with all of the news and all of the fires and the high temperatures and the flooding and all of the things kind of slowly imploding? Do you think it's still hard to get buy-in from politicians to show the leadership, or to the asset owners or managers? I never really found it very difficult because, when we started, I was dealing mainly with irresponsible investors and criminals and the Donald Trump types. I never found it really difficult as long as you communicate in their language. Do you find it much easier now in convincing your colleagues or other fund managers?
Oh, with colleagues and fund managers, that's fine. Politicians, that's a different thing. I remember talking to one MP during a general election and saying, you haven't said anything about climate change. You need to talk about climate change. Well, yeah, but no, that doesn't seem to, in the surveys, it doesn't seem to be the important. By the time the campaign was ending, they were talking about climate change because it really was. Now, talking about something and meaning it and integrating it into your being and into what you want to achieve as a politician are two different things. And that I don't know. With some, I'm not sure yet. But you meet somebody like Al Gore, who I had the pleasure to meet at an investment conference in Prague, and he was so impressive. He gave one of the best presentations I've ever seen. And he was just so genuine in what he was saying. And he gave me a hug. I've been recounting that one. I was so happy. And he's been doing responsible investment through their Generation Fund for producing great returns for a long time. So there are politicians out there who live and breathe and feel it. And in our own country, we have the Prince of Wales. Now, he's been at it for 40 years, if not longer. And people used to think he was a little bit, eccentric. And now I don't think anyone thinks he's eccentric. And certainly Prince William is also, he's heavily involved as well with David Attenborough, etc.
I've always found that one of the reason why it's taken so long is that no one in the developed world is really, 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 really suffering. And we have to reach a point where people are really suffering in the developed world or the influential world or the money world before they start to wake up?
Well, I think I am going to have to disagree with you slightly, Robert, because I do think in the developed world, some people are really suffering. We just don't pay any attention to them. And that, one example, because I know that example quite well, is farmers. So I come from a farming background, generations and generations of farming. This summer in Canada, where I grew up, so too hot, no crops. The crops are terrible. They have some crops. You cannot, it's in the UK, farming, the way we handle husbandry and pricing, etc., farmers are really, really struggling. And I wouldn't be surprised if a lot of them just close their doors. Some of them are talking about transitioning to other things. Like I know a New Zealand farm that, were sheep farmers, and they just couldn't make any money at it. So all they do now is honey. So they don't have to use the labor, and the bees, they just look after the bees and export their Manuka honey at very, very big prices. And not to mention also that we have areas of deprivation in the UK. We have people who really genuinely are, and I know that there's an area not far from where I live where people are really struggling. The food bank has gone up 400%, and they are really genuinely having to make the decision of heating or eating this winter. So that was my pushback.
We're coming to the end of the hour, and I'm very sensitive of your busy schedule. Is there anything that this audience that's listening live and those that will watch the replay or on our YouTube channel can do to help you?
Spread the word. Spread the word. And if you yourself are faced with difficult choices when you're investing or in anything you do that involves, trying to make the work a better place, there was a general in the Army who said, when faced with those two difficult choices, always take the one that requires you to be the most brave. We all have to be brave, and we all have to tackle this head on.
Thank you, Denise, very, very much. If you don't mind, I'd like to take a group selfie with everyone who's here. All you have to do is wave to the camera, and it will take a photo, and then I'll send you a copy of this. This has been fantastic. Denise, it's such a pleasure to meet someone who actually speaks her mind and shouts her barbaric yawp over the rooftops of the world, like Walt Whitman used to say. So thank you, and let me know when you're running for office. We do have a lot of UK friends who would support you. This has been really, really very, very great, and I really appreciate your time and all the work that you're doing. We will, this tape will be processed, and then it will be live. It'll be available for all those who signed up. I will send everyone a link to this. If you want me to add any report, Denise, to the mailing I will send to anyone about your work or anything, I'm happy to do that. Just send me the link, and I'll include that in the mailing. So thank you again for your time and also for your great work. This is, we need people shouting their barbaric yawp more frequently. And I'm glad that you did push back that there is, that people are suffering, and that we can't wait anymore for politicians to wake up.
Well, thank you very much, Robert. The pleasure's all mine.
Thank you so much. See you soon. Stay well. Okay.